Hello, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. TGIF. I'm so happy it's Friday. You know, I was so tired last night. I went to sleep. I went to sleep like a half an hour early because I'm like, man, I'm tired. I need to, go to bed. Of course, I don't sleep until my alarm goes off. I get up a half an hour earlier this morning, and I'm sitting there waiting for my coffee because my coffee's on a timer. So it usually goes off when I wake up. And of course, I had to start it manually. So I'm sitting there waiting for my timer going, man, why couldn't I just sleep like another 30 minutes? Yeah, there's a sad thing with, I know some of you probably face the same issues I do when you have like the body that just, it's you're on a clock, right? It's like the internal clock goes off. Anyway, I'm just kind of like venting because I'm like, man, I should have been able to sleep in. I was just hoping I could sleep in. Anyway, let's talk about the market. Remember, it is Friday, and I have to say, S&Ps are holding up really well, and we're in triangle breakout territory right now. But triangle could end up looking like this if we want to talk symmetry, right? It could end up being more like this, which let's think about that for a second. We could end up doing something like that, which could be like a Garley-ish pattern. So I'm going to go back to like my previous analysis, even though we're, I'm going to respect the fact that we're higher, right? But I want to think about some symmetry here. But I want to go back to my previous analysis from earlier this week, and I'm going to say this, and you probably heard me say this on Monday. While it's trading below 4,200, you got to be a little careful because let's face the fact that we came out of an ascending wedge. So while we're below 4,200, I think we have to be careful. That doesn't mean that we can't go up to 4,200. I just think, as we're within proximity, you just got to be careful with longs. Okay. But this bounce back in risk, especially yesterday, it's like, straight up 70 handles. And then we just sat there. It's like, what kind of crap is that? But it's the market we're dealing with, and it's holding up, right? So that's the thing that we have to be aware of. Okay, so with that being said, let's talk about the S&P at 4,200. Let's write that down as resistance. Okay, support. We're going to call it 4,085. Okay, so right, and we're just going to leave it at that, and we're going to keep it in range. I think, well, shoot, I don't know. You know what? We probably just have to flip it over to bullish and just leave it there while we're above 4,000. It's, that's really where we're at, right? We just gonna have to leave it bullish. All right, let's go over to the euro. So the euro is looking a little at risk. Obviously, the resistance is holding, and this is we need to watch the resistance here at 122.40. Okay, so it's 122.45, I think is what it is. And I'm gonna keep. I know we've had it on bullish, and we're gonna keep it on bullish for now. Let me get rid of this. But as I said earlier today, the risk here is if we break through these lows, and especially if we break through this trend line support, which right now comes in at 121. Let's call it 121.30. Okay. While we're above 121.30, and I'm pretty sure every day this week we have moved up that we've moved up that number. We were 121.25 earlier this week. I bet we were at 121, right? Because it's just an ascending trend line. So you got to follow it up. So today it's 121.30. Cable. So as we talked about on the FACE webinar, big rejection at resistance here. So can we continue higher? Sure, we can continue up to 142.50, which is the 127% extension of this last move lower. So I'm going to write that down, 142.50. I'm not writing down today's highs. Okay. But support is right here. Still. It held yesterday. What did we write down as support yesterday? 140.80. Yesterday we went as low as, how low can you go? We went as low as I'm looking. Oh, I guess we're over here. We held this support. I'm sorry, I didn't write down the support. This is the 141.60 level. Remember, this is the previous breakout point. So we're going to have to write that down first. So 141.60 and then 140.80. Okay. Looks like that. Okay. That's what we'll have to do for today. Let's keep it in bullish for now, just because we are in a bullish ascending channel. And I think while we're above 140, we got to stay bullish, but because you think about it, we could actually come down here like this today. And then over the course of the next couple of days, maybe come back down here. And by the time we get down to this 140 support, it could be over here. And then our channel support's going to come into play, right? So it's still bullish, even though it looks like we might retrace. So let's just keep that. Let's keep that written down. Hold on really quick. Aussie dollar. Big resistance. This is big support. Sorry. Our YouTube channel is still running, and it's running blank right now. So I had just an issue that our YouTube channel is running, but it doesn't have anything on it because FACE turned off. So we had to do a couple things manually today. So anyway, just adjusting. Sorry about that. Sorry about me going blank for a second, because that's what I was just referencing. All right, resistance 78.20, support 76.90. 76.90, 78.20. Nothing's changed all week, pretty much. 76.90, 78.20. Oops. And we're in a range. Kiwi. Triangle. Still. These numbers are changing slightly, but now this resistance is for sure here at 72.70. I think maybe we should write 72.75. And support is now 71.70. Okay. All right. US dollar Norwegian krona is getting its little move on right now. You know, I'm gonna flip over to it really quick, and the reason why I want to do that is because this thing's stocks are higher. US dollar Norwegian krona is holding up. Okay. Crude is bouncing this morning. US dollar Norwegian krona is holding up. So we can't ignore that. We can't ignore all of that for now. I still will stand behind that this 840 level, and actually we'll just write 841 just to be a little bit more granular here. That's key. 841. But it's also holding. I mean, look, we're not dropping now below like 8.25. I think we wrote down 8.25, 825. I mean, I'm going to keep it on bearish while we're below that 840, 841 level, but let's not ignore that it's holding up pretty well. Okay. Dollar Canadian. This thing's trading heavy, but we're holding above these lows. We can drop all the way to 119.70, and we should write that down. We'll write 119.70 and 120. There's some barriers down at the 120 level. So, and we have to stay bearish while we're below 122. I know I say that every day, but right now resistance is right here, 121.50. Dollar Swiss. We're trying to hold up here. Resistance 90.50, support 89.60, although we went lower than that, but we might have done a false breakdown. So let's just go 89.50, 89.50, 90.50, and we're bearish while we're below the 200-day moving average, which comes in at 91, maybe 80 now, 91.76. So we actually have to get above this to turn bullish. Okay. But that doesn't mean that you can't, if you're on the short side right now, you shouldn't be careful, because we did have a false breakdown this morning, right? And the euro is stronger. So the Swissy is obviously inverse. It's going to keep it a little bit. US dollar, Norwegian krona, we got that. Dollar Mex. I mean, come on. 1978. Now and I know we've been writing down 2010. Is that what we wrote down yesterday? 2010, yeah. So we're going to stick with that. 1978, 20, oops. Dang it. No. Okay. 2010. Dollar yen. Holding trendline support really well. 108.55 is the trend line and recent lows. So that's going to be really important for bulls to hold. Resistance 109.65. You guys know why, because it's a 618 up here. Dollar index holding the lows for now, 89.65. Stock market's going to open right now. Resistance 90 and 90. Well, it's a 618 here. Previous 618, also trend line now. And we can actually get rid of this. We already know why it's supporting so high to low. 618 and trend line let's just call it 90.45. And it's bearish while we're below that. But that doesn't mean we can't get up there. Okay. Gold, silver, Bitcoin. So let's go to silver, going back up a little bit. Should have some resistance at 28.20. I think we wrote down 28.25. Oh, we wrote down 28.70. But now that we're, just kind of sitting here, I mean, obviously the 78% retracement's key. Support is rising, so now it's 27.15. Um, $28.75. Gold, I mean, looks good. I mean, but look, this was the outside day from yesterday or 2 days ago. Outside day, that was a spike high from 2 days ago, and we haven't been able to break it this morning. So let's mark up that resistance, 1890, and then support obviously 1845. While we're above 1845, you have to stay bullish. But I think yesterday we might have wrote down 1890. We sure did. And we're going to keep it. And we're going to keep it on bullish while we're above 1845. Okay. Even though silver, not so much. Gold, not bad. Okay. Bitcoin. Here, resistance, 42, or I'm just going to write 43K. I know we can write 42 and a half if we want to be really granular, but it's Bitcoin. There's a lot of emotions around Bitcoin, and I'm very much in the camp that we can go through a level and come right back down. It's, remember, support and resistance is all a zone anyway. You don't want to get too hung up on, oh, that's really key support and that's a really important level, because if it was an exact science, it would be so much easier, but it's not. So that's why we have to look at ranges. Support, what's interesting about Bitcoin, if you look more intraday, is we are holding dips. So I think instead of writing down support about being 35,000, today support's probably going to be closer to 38,000. Okay. All right, guys and gals, I'm gonna transfer this bias chart over to our platform. Stelios is not going to be here. He's out enjoying himself, which he definitely deserves. Steve, on the other hand, should punish himself and do self-mutilation. So, Steve, how are you?
What part of myself do you want me to mutilate?
Please take a hammer and smash your pinky finger when you get a chance. Okay.
Yeah.
I know it's like
that's my dream.
I'm so jealous of Stelios right now. I really wish I was on the sea on a boat. God, that'd be so great. I can't remember the last time I've been on a boat. Well, actually, I do remember last time I was on a boat, but that's irrelevant.
Why wouldn't you remember it?
I wish I could remember. But obviously our lakes here in where I live, they're cool because that's what we have around here. But if it's not even apples to apples, it's apples to like pineapples. Trying to compare what we have versus what you have in the Aegean Sea. So,
yeah, in that sense, we are blessed indeed.
Oh my God, so blessed. And you know what I get? I get scorpions. So there. Hey, but I'll also have to say, 80% of the homes here where we live have pools. So, I may not have an ocean, but I've got a little pool in the backyard, and
Yeah, that's always good.
it gets hot. I just plop in there, and it's like a bath. Anyway, the equities are still holding up really well. Risk is holding up well, and I have to genuinely say, with Bitcoin breaking down this week, I'm really surprised stocks are as well bid as they are. I mean, that to me has been pretty impressive. And I was reading this analyst note about Bitcoin, and which is really, very true, because Bitcoin, or the crypto markets, whether or not you believe in them, and it's still, I still think the jury's out. But if it's really like blockchain and digital currencies are the next level of finance, which I don't disagree that we will be in a digital currency world, whether
Of course we
blockchain
will.
is the technology
There's
or
no
not.
disagreement to that. I
Yeah.
mean, technology moves forward, right? So of course,
Yeah. But I want to point out that if stocks can hold up and avoid getting too worked up with a crypto implosion, let's say Bitcoin slumps back to like 10,000, and all the altcoins go, so many altcoins go away, which I think is going to be the case, like the internet, and I always run those two parallel .com bubble thought process to where we're at with cryptos. If that happens, but stocks can keep it together, the amount of jobs creation in the crypto world in the years to come is only going to be good for the markets in the future. But and that was just from a note that's like paraphrasing some notes from an analyst.
yeah, I have a question about that for the guy. So how many jobs did the creation of any fiat currency bring on the table? I mean, I don't understand the point with job creation. I mean, we can make arguments about the rest, how we're moving into a digital world. Yes, checkbox, absolutely, unquestionably. Of course, that has nothing to do with the potential success of any of the specific cryptocurrencies, because it's one thing saying we're moving from the horse to some kind of an automobile. It's another thing saying that we know which automobile company is going to dominate, right? Because they're different things. Now, having to do with job creation, I mean, I have a lot of questions, because one of the basic characteristics or characteristic of technology and anything digital is that it needs very few people doing the job, because it's mostly technology. So I don't really get that last part.
Well, let's say, crypto markets and exchanges are here. You're going to have brokerage firms. You're going to have,
How many people work in brokerage firms for FX,
well,
which is the biggest and most liquid market on the planet
but
for
like
decades?
if there's another asset class that's created, and then you
Yeah,
got,
it's going to create 1,000 jobs globally, 2,000, 3,000 jobs globally. Okay, how much does that move the needle?
well, I don't know. But I don't know. I'm just saying that, it's I think it's going to be good for the overall economy. You know, I don't know if we can substantiate how many jobs that will be. I don't know.
I think very few.
Well, that's your opinion.
No, it's based on the fact that more or less I have a broad idea of how many people are being employed, for example, by FX brokers all over the world, and there is no argument if actual currencies are traded more than cryptocurrencies, right? We know that it's almost $6 trillion of global transactions in fiat currencies, right? We are nowhere even in the vicinity of a fraction of that with crypto. So, I mean, having to do with job creation, I totally disagree with the guy's point. The jobs created in a global scale are going to be not even a drop in the ocean.
Well, we will see, but for now, stocks are avoiding the
Yes,
hard.
they are. For the time being, they don't seem to care about it. That's
No,
true.
no, they don't. And so I'm going to let you take over, Steve. I'm going to go take a little bit of a break, but you guys all have a great weekend. Thanks for always your support. Those of you that are listening in right now, thank you all for your support with ForexAnalytix, and have a great weekend. I'll see. Excuse me, I just choked on something. I'm going to see you guys in the chat rooms. I'm also going to be doing some filming today. I'm trying to allocate my Friday mornings to do filming of some videos that the team, Steve, myself, the rest of the team, we're working on content creation. And Fridays, since they tend to be kind of slower days, I'm kind of allocating these days for some content creation. So, and it's all for you guys, for just education, for you as a ForexAnalytix subscriber. So, have a great day and have a great weekend.
Thank
Steve,
you,
I'm
mate.
gonna pass over
Talk
to
to you
you.
later. Bye
All
bye,
right.
mate. Okay, so fortunately for him, Stelios is not with us. He's enjoying the GNC. So let's get to it. Before I go into questions, I'm going to do the usual, short commentary about what I think, has moved somewhat the needle since yesterday. Because, in all honesty, it's not that we've had like anything really major happening since yesterday. We've had that couple of days of volatility, which seem to have calmed down for the time being. Now let's see if this is the market's taking a breather before we get some more volatility, or if that was a short-term thing. As I said before, since cryptos were the theme of the week due to that massive move lower, I find myself, this is what we drew yesterday, a potential like count. I find myself hard to convince that this move is necessarily over. So I'm paying close attention to this $42,500 resistance area having to do with Bitcoin, the equivalent area with Ethereum. I would have to say is somewhere closer to 3.2 thousand. Let me also draw it since we're talking about it. Somewhere there. So as long as that's the case, I think there is the possibility for more weakness, right? So far, yesterday we had an inside day. So far today is an inside day to an inside day. So, this is the type of behavior you see after a very, very strong and sharp move. The market, in essence, consolidating, and market participants trying to see, trying to understand where the needle is going to be moving next. In my opinion, the dangers in the short to medium term are still tilted to the downside. Of course, I know that these markets, being influenced by so much of mania, are much harder to predict than if that would be a regular asset, let's say a stock, a commodity, a forex market. So, my conviction level is lower than it would be if we were talking about a market that behaves more traditionally, right? But I would still take that side of the market if I was forced to do something about it. I would rather be, short looking for more weakness before we actually find the low than the opposite. Now, equity markets, on the other hand, never broke down, right? We were talking about that yesterday as well. S&P has always been for me the barometer for risk on a global scale. I'm still monitoring this large ascending wedge. We've held it. We've been rebounding higher. Yeah, the way we've been moving higher so far is, by the way, we just got manufacturing PMIs preliminary from the US, 61.5 versus 60.2, so stronger than expected. Now, do I think it's going to move the needle? Not really much. In any case, it's a better than expected number, and PMIs are a rather important indicator. So might push a little bit towards the risk on direction and perhaps towards the dollar catching somewhat more of a bid. Now, if we look in the shorter term, here's the S&P on the 4-hour chart, right? So there is still an argument to be made here that we're going to get some type of formation like this and then get one leg lower before we actually continue higher, right? So what's this area for resistance? We're actually testing it as we speak. What's this area for resistance? It's quite an important resistance area. If we get rejected from here, I think we can easily see the index produce a new low next week. And of course, we take it from there, meaning we can analyze what kind of momentum the move lower has, so on and so forth, to see if it's the last leg lower of a corrective move or something different. In any case, from a risk reward perspective in the short term, respect this resistance. Let's see if it holds. Otherwise, I think we break through it. I think we're just going to find ourselves to new highs very, very soon, even next week. So I think it's in the short term, this is some kind of a pivot area. Having to do with the dollar, we've seen some kind of a stabilization in this move lower within this descending channel, right? We haven't managed to produce a lower low from that low that we had in the beginning of the year. So for the time being, the January low still holds, but that's the only bullish argument somebody can make, really, and the fact that momentum seems to be waning. In order for me to look for a stronger rebound higher in the dollar, I would need to see this channel break to the upside, and clearly, only some risk off can really help in in that direction. At least from what we've seen so far this whole year, because this whole year in general the dollar has been underperforming and doing somewhat better when we have risk off. So unless this risk off scenario we were describing before plays out, I don't really see the potential for much upside here in the dollar index. Now, for those that are looking for reversal trades, the equivalent bearish case scenario for the Euro USD, which is an almost inverse asset to the DXY, because the DXY is heavily loaded with Euro and its proxies like the SEC and the Swissy. This is the bearish type scenario, which is like an ascending wedge playing out here, in which case we might see a pullback to retrace the wedge before seeing higher levels. But as I said, this is like the counter trend type of scenario, right? Some RSI divergence as well to note it there. Now, even if this plays out, I'm not going to be looking for like a long-term reversal down in the euro and higher in the dollar, just like shorter-term moves. So my general thesis hasn't really changed. Now, as I said before, in when we were on FA.C.E, other than the cryptocurrencies, for me, an important development is the fact that gold seems to be about to close above this corrective channel for the first time after we peaked last summer, right? And technically speaking, that's a very important development. Now, it doesn't seem very likely that we are going to invalidate this outlook by the end of the day today. You never know, of course, with the markets, but it doesn't seem that likely. We would need to move lower from here, something like $25, which, seeing how the day goes so far, not the most probable scenario. Now, we didn't have a look at crude oil yesterday for a good reason, because we haven't had anything really happening in this market. The short term development, somebody could claim, is the breakdown from this red channel, which potentially would only open the downside within this larger channel, because the technical outlook for crude remains good, bullish, unquestionably. Now, within this larger blue channel, we might see more weakness, although today's candlestick, which so far completely invalidates yesterday's drop, is not a good start for those that want to be bearish. Personally, as I've told you, I would only want to take the long side of any of these assets. So I'm not looking to trade them counter trend. In any case, that's what I think about it. Platinum, Palladium, nothing has really changed. They both seem. I mean, Palladium seems to be in a healthy corrective move lower. Watch 2700 as support. Having to do with Platinum, the jury's still out, in my opinion. There is a chance that this is a corrective formation in this first leg lower, and we might see another leg lower towards 1040 before higher. Alternatively, if we hold above 1170, we can just see an acceleration higher, and that's going to be it. So higher in the medium to long term. Short term, I do see the potential for another leg lower towards 1040, and the market, as you see, has spent a lot of time consolidating, not doing anything. So it doesn't want to give us clarity yet, but it's okay. I mean, we have all the time in the markets. In my opinion, the biggest mistake you can do is force yourself to trade something that doesn't want to be traded, right? And Platinum at the moment doesn't want to be traded. I mean, the price action it produces is not one that should push you into doing something with it now, right? So why force yourself to do something with it now? I mean, there are so many other things you can be trading. Always. I mean, there's so many markets out there. As long as you don't force yourself to just look at, a handful of them, there is always something interesting to trade. Now, there is one last thing I wanted to talk about today before we go in questions, and that was the euro pound, because euro pound has the benefit of, here it is on the daily chart, has the benefit of not involving the dollar at all, so not correlated with risk on and risk off in any way. So it gives you the ability to trade something from a technical perspective that doesn't really, get you messed up with, we got a little bit of a risk off. Is there going to be some continuation? Was this it? So on and so forth. I said a couple of weeks ago that probably this corrective move was over and we were moving lower. And I think if you look at shorter term charts, there is also more evidence that in the short term, we're also going to be breaking lower and continuing to the downside. We are flirting with breaking down from this little channel. So in my opinion, the path of least resistance remains to downside in the euro pound. And this seems like a decent, uncorrelated trade to everything else for somebody to want to be involved with, if that's your cup of tea, of course. Now let me go through some of your questions and see what you want to look at. Thank you, Blair. And employment numbers, agree, Steve. Oh, I'm guessing that had to do with how many jobs the crypto world can create. Yeah, I'm pretty sure about that. I mean, yeah, I've seen a lot of analysts write a lot of BS because they need to write something. But in all honesty, somebody believing that the crypto or any financial sector for that matter, it's not like me being biased against crypto, can create like a substantial number of jobs that can move the needle. Absolutely no way, right? Absolutely no way. I mean, the whole banking sector has not created enough jobs to really move the needle in the global employment. So, no matter how good cryptos do, I mean, they're heavily based on technology. Will they create some jobs? Yes, unquestionably. Will there be enough to really move the needle on employment? Absolutely not. I don't know if Brent oil has any correlation with Brent oil with crude oil. Of course, they're correlated with each other. Don't forget that they are very, very relevant products, right? Both of them are oil. Yes, they have somewhat different characteristics. One is like thinner and better. The other one is like, more, more low quality, etc. But as you understand, I mean, in many cases, they can also substitute each other, not in all cases, but in many cases. So, clearly, there is, there is a movement of the spread between Brent and crude. Sometimes it widens, sometimes it closes, but in general, over time, they're extremely highly correlated with each other. So one of them moving higher and the other one moving lower yeah, that's not something you're ever going to see. And I'm not talking about one closing the day positive 0.2 and the other closing the day negative 0.1, right? Because in that sense, yes, they can, they can close with a different sign at the end of the day if they're both oscillating around zero, right? But up to that. So yes, one moves higher, the other will move higher in general as well. And in general, they have a more or less standard spread that they're oscillating around as well. There's been periods for several geopolitical reasons that we've seen that spread close or widen. But yes, I mean, trading one is like trading the other from a technical perspective, right? They almost always form the same type of corrections, and they break out in the same direction. So on and so forth. Yes, as expected, somebody mentions the dollar is getting bid following the PMIs, and that is to be expected. Same with indices, right? So we're seeing the S&P being at the highs of the day. We're seeing the dollar being at the highs of the day. In the grand scheme of things, nothing to write home about, right? But yes, the PMIs, as expected, do have somewhat of a positive influence in market participants' sentiment. Now, there was a question about the IWM, and we might as well have a look at it. Here is the Russell. As you see, a very nice symmetrical triangle. Alternative interpretation is a head and shoulders formation. Of course, that remains the alternative interpretation because that implies a topping pattern, right? And as I've explained multiple times, your main case scenario should never be a counter trend scenario. So as long as the trend line support of this triangle holds, the bullish case scenario should be your main case scenario, which would imply an eventual break higher from here and a push to new highs. In my opinion, next upside target would be at around 250. What would you do with it currently? Absolutely nothing. Why? Because we're in the middle of a range we've been holding for such a long period of time. So why would you want to be involved with this market? You might as well grab yourself a coin and start flipping it and bet with your friends. So, I'm not here to teach you how to be a gambler. I'm here to tell you how to be an investor. And as an investor, I'm telling you, don't do anything with it as we speak. You buy the breakout or the breakdown. And in my opinion, they should produce a continuation one way or the other. Of course, if we break higher from here, you also have the trend aligned with you, which is a good thing. Although I would warn a little bit of caution. We've talked about multiple times how breakouts from triangles are usually terminal formations, in which case, once we reach 250, I would start being very, very careful for a reversal lower and a deeper corrective move, which we haven't seen in such a long time. Look at the Russell, right? I mean, since we bottomed out last March, we haven't had a corrective move other than consolidations, right? So no deep corrective moves, so no correction in price, mostly correction in time. And at some point, any given trend needs to also correct in price other than time, right? It's the healthy thing to happen. So keep that in mind. So bottom line, to recap, I'm favoring likely a break higher for one more move higher towards 250. And from there, we could as well see a nice deeper corrective move lower before we can, resume the whatever uptrend we'll have in hand. PLG, what is that, mate? What is PLG? Let me see. PLG. Oh, we've had a look at it before. Yeah, it's still riding this broken. The move here has become somewhat not easy to read. I think we need more price action. We just got some data. Let me see. EU consumer confidence minus 5.1 versus minus 6.8 expected. So less worse than expected. US existing home sales lower than expected by 250,000, 5.85 versus 6.1 expected. And US existing home sales as a percentage change minus 2.7% versus positive 2% expected. So we're seeing some weakness in the home sales and in the housing market. In my opinion, that is to be expected for two reasons. One, we've had a substantial move higher in costs that are related to building a house, and that definitely spills over in price. We've had also a big rally, which means higher prices as well. And the logic says that the fact that we're seeing inflation expectations pick up also have an influence having to do with willingness of people to take loans perversely, of course, because people are not always thinking rationally. I mean, they're frequently trying to think rationally. Unfortunately, the vast majority of people don't have the ability to think rationally. So what is rational for them is actually irrational, because there is, let's say, the expectation that a pickup in inflation will mean a pickup in yields as well. So far a valid explanation. What they fail to understand is that for all the purposes we've explained in the past, central banks will remain way behind the curve on inflation, meaning that even any kind of rate hikes that we get are still going to be dwarfed by the increase in inflation. So real rates, even if nominal rates start moving somewhat higher, real rates will remain extremely low, and in my opinion, most likely will keep on dropping to even more negative territory. So bottom line, what I'm trying to say is that you shouldn't be dissuaded in getting a housing loan just because you think that nominal rates are going to pick up somewhat, because what you should care about is what are the real yields going to be doing during the period that you're going to be holding your loan and repaying your loan. And in my opinion, you shouldn't be worried at all about that, right? Because every government and every central bank is boxed in the same corner, because with all their prior actions during the previous decades, what they've managed to do is make sure that both governments and even corporations nowadays be so indebted that real rates, can never really increase higher until we get some kind of a reset. So reset in debt, and that's not going to look pretty, no matter which method it manifests. So keep that in mind. In any case, going back to PLG, platinum group metals. I still think this is some type of a corrective move. I still think we're moving higher. But, we might see a little bit more weakness before that happens, right? I do think, though, that the path of least resistance is definitely higher. So keep that in mind. Let me see. Steve, what do you believe is behind the non-stop bid in the equity markets? Active managers simply would not be buying at these levels. Is it too much to ask for a decent pullback, or you think this just goes up until the Fed tapers and starts raising rates? More or less, that's what I think. This will be the situation until we see some real jitters in the markets. Right. And I would still be very skeptical in taking the downside for more than short periods of time, because don't forget that the Fed still has a tool they haven't used, of course, an illegal tool, but it has never stopped them in the past, which is buying stocks themselves. I know that it's part of their mandate that they cannot do that, but it was also part of their mandate that they could not be buying debt, government debt. They changed their mandate to make that happen. It was also part of their mandate that they could not buy corporate debt. They didn't even change their mandate to do that. What they did is they bypassed their mandate by creating other facilities that did that with liquidity they provided, right? So, I mean, if you've been long enough in these markets, you know one thing. The house is the central bank, and it makes the rules, and they make the rules as they go. We know from other central banks that they officially buy equities, right? Now, how much do you think the Fed needs to be pressured before it makes it one way or another its job to buy equities? I think very, very little. They see a big crack in the market, and since they've already thrown tons and tons of quantitative easing, since they've already pushed real rates to deeply negative, what else do they have to do? Start buying equities themselves. And I do believe that it's going to happen sooner rather than later. As I said, the next time we see a big crack in the market, Fed is going to start buying equities. I don't know how they're going to do it. I don't know if they're going to have Congress change their mandate, if they're going to have again other facilities made so they can do that. You know, it's really funny because it's the epitome of a Ponzi scheme creating another Ponzi scheme. For those of you that don't know the history of the Fed, and I like to mention that on occasion, the reason the Federal Reserve was created, not the official reason, but the actual reason, is because the Constitution of the US did not allow for the creation of money. Sorry, of currency, not money, because money is constitutionally gold and silver, still is. There's been no change in the constitution having to do about that. So they had to create a third party, a private third party, because if it wasn't private, it would still go against the constitution, right? And that was the central bank. And they created the central bank. And now the central bank, which has a mandate itself, creates other entities so they can bypass the mandate they were given from a government that created them, because the government didn't want to bypass their mandate, which is the constitution in this case. So you see how nice it is. I mean, how in essence, let's, I'm not going to say illegal because, you know, having to do with legality, you know, it's a very technical term, but I'm going to say that, you know, when you actually want to do stuff under the table, or when you want to bypass the essence of the law by upholding, though, at the same time, you know, the writing of the law, you know, there is always ways to do that. And, you know, the same thing that government did by creating the central bank, now the central bank does by creating other facilities. I'm wondering if it's going to come to a day that facilities that were created by the central bank are going to be creating facilities themselves to do something else that they were not given the authority to do by the Federal Reserve that created them. Anyhow, it's a really funny Ponzi scheme, if you ask me. Wood, give me lumber, you mean, right, mate? You too, Rick. So lumber, remind me, what is the what was this the ticker we were looking at? First of all, let me open it here because I have commodities over there. So let's see. Yeah, lumber. Wood. Oh, so you actually want, okay, got it. So you actually, that's a ticker you want us to have a look at. This one, right? Sorry, I thought you meant lumber by saying wood. Okay. Clearly an amazingly bullish trend, right? Let's see. Oh, there we go. So some kind of a top out of a triangle. And now we're back testing this support resistance area support. I think there is a decent danger that there is more downside here. So be careful if you're long. We've had many textbook bullish consolidations in a row. all of them broke in the direction of the trend, right? This type of a reversal, though, and the full retracement back there doesn't look that good. Having said that, in the short term, you can even attempt to buy it here against the 50 DMA, right? In the short term, because we are at an area of support. But my gut feeling tells me that it might be ready for somewhat of a deeper corrective move towards this trend line support that you see here. So, if you want to buy it, I think you should keep your stop loss below the spike that we had earlier in the week. And if we break through that, then let it move even further because it has room to move even further. Needless to say, if at some point it breaks through this trend line support, there's going to be a much, much deeper corrective move underway, right? In that case, I would be looking, and don't forget that price always has memory, right? Look at how obvious it is, right? Look at this area, how many times it's been tested by the markets as support resistance in the past. So in my opinion, we break through this trend line support and you're going to see a corrective move all the way down towards like 67, 68. But until that happens, of course, you need to respect the upside. This is a very, very strong uptrend. And, I gave you guidance for that before. It's a lumber ETF. Okay, yeah. So we seem to be having a corrective move lower finally. I mean, after this massive, massive move higher, the trend remains higher, as I said. I even gave you downside targets. Any more questions, guys, gals, before we call it a weekend? EL, okay. EL. Is this the one, mate? Estée Lauder. Is this what you're looking for? Yeah, this is the one. Okay. I would be very, very worried by this behavior, I have to tell you. This massive gap lower, which wasn't even filled, and it happened on earnings, right? Logic says that this has at least one more leg lower, at least, and we see how it unfolds from there, right? But I wouldn't be buying it, no matter what. Nice, strong uptrend. But I think it has cracked. Okay. Facebook. Whew. Look at how long it's been since we had a look at Facebook. Look at how long it's been. Yeah, back there, I remember that we were talking about how this looks like a bullish megaphone formation. And then we got a very, very clean corrective formation. Which was it? It was this one, right? Nice break higher, retest of the broken trend line support, and higher again it went. Question is what happens from here. RSI diverging. I'm not sure. I wouldn't touch it for the time being. I'll tell you why. Because we don't have enough price action to know. I mean, I can give you so many alternative possibilities of how this can, this is a good case scenario, my main case scenario, some type of a consolidation and higher. But then there are more scenarios. I mean, you do a little bit geometry in school and you start looking at charts, just giving you alternative scenarios so you'll understand why I would be skeptical, right? In giving an opinion without even having enough price action to draw proper lines, right? So there you go. I already gave you 2 scenarios. Let me give you a third scenario, the bearish case scenario. Head and shoulders formation, lower. Now, I don't favor this for reasons I explained before again, right? When you are in a clear uptrend, you don't, start dreaming on reversal scenarios being like the main case scenario, because you're going to find yourself losing money more frequently than you make money. So my main case scenario is this is some kind of a corrective move, but with so little price action. Is it a triangle? Is it a flag? Is it something else? Is it something more complex? No clue. So give it more time, if you ask me. Give it more time to unfold. I just read that you wrote about a head and shoulders case scenario, which I already covered before I even show it. So yes, can it be a head and shoulders formation? Yes, it can. Should that be your main case scenario? No, it shouldn't. That's my point. Okay. SEDG. What is this? We had a look at it before. Look how beautifully it unfolded, right? Exactly as we expected. So I said that probably more weakness within larger consolidation. Now we can redraw it even a little bit, make it a little bit more perfect, given the recent price action. So as you see, our scenario is still playing out beautifully, and nothing has changed here, meaning let's rearrange everything. We break higher, you should trust the breakout, right? Let me say it again. We break higher, you should trust the breakout. But who tells you that we can't get rejected once again and keep on unfolding this corrective move lower? Nobody, right? So I think it's rather quote unquote safe to buy the breakout higher, putting it in quotes because nothing is certain in the markets. But technically speaking, it's a very, very good trade setup, right? But don't jump the gun, because nobody says that we can't get rejected from this channel once again and keep on spending even more time correcting the prior gains. So I remain bullish in the medium to long term, but I have no reason to be bullish in the short to medium term as long as this trend line resistance is holding. Okay. Okay, guys, girls. We just hit the 1 hour mark from when we started. Have a wonderful weekend, and we'll see you back on Monday. Bye-bye.